Most people think money is about how much you earn, but that's a lie. You can make $100,000 a year and still feel broke, stressed, and out of control. Why? Because your habits, mindset, and tiny daily decisions quietly leak cash and energy without you even noticing. Imagine tracking your spending weekly, investing consistently, and protecting your focus, versus just hustling harder while your money slips away. The difference? In 5 years, your financial life looks like night and day. Today, I'm going to show you how modern billionaires think, and exactly how to apply those strategies in your own life, so you can stop chasing money and start letting it work for you. And the first principle? Almost everyone misses it, and it alone can flip your financial trajectory. Modern billionaires aren't guessing with their money, they're tracking it like a scoreboard in the NBA Finals. They know their numbers down to the dollar, because financial psychology starts with awareness. When someone begins tracking income and expenses weekly, personal finance stops being emotional and starts becoming strategic. It's one of the most underrated finance tips out there, yet it's the foundation of powerful money habits. Think about it like Moneyball with Brad Pitt. In Moneyball, the Oakland A's stopped relying on feelings and started relying on data, and that shift changed everything. The same thing happens when someone opens a simple spreadsheet or uses an app like NAB or Mint and actually sees where the cash is going. Financial education becomes real when numbers replace assumptions, and that's when how to make money becomes clearer because leaks get exposed. A practical move? Every Sunday night, sit down for 20 minutes, coffee in hand, and review the week. List fixed expenses like rent, car payment, Netflix, then variable ones like eating out or impulse Amazon buys. If someone earns $4,000 a month but spends $4,300, that $300 gap is not bad luck, it's a measurable pattern. Once measured, it can be fixed, and those corrected habits compound into thousands saved over a year. This level of brutal honesty stings at first, no doubt. But it builds a money mindset that's grounded in reality, not vibes. When someone understands their numbers, they gain control, and control creates confidence in personal finance. And once control is established, the next question naturally hits hard. If they're spending, what exactly are they spending on, and is it building wealth or just building an image? Modern billionaires don't swipe their cards to impress strangers, they invest to increase net worth. Before any purchase, they run it through a simple filter rooted in financial psychology. Will this make money or just make noise? That single question separates strong money habits from ego-driven spending. It's one of the most powerful finance tips in personal finance, and most people completely ignore it. It's like that scene in The Pursuit of Happiness with Will Smith, when he's sleeping in a subway bathroom but protecting those bone density scanners because they're assets. He wasn't chasing applause, he was protecting opportunity. Someone building a real money mindset understands that a $50,000 luxury car might look good on Instagram, but $50,000 invested in something like an S&P 500 index fund averaging 8 to 10% annually could double in about 7 to 9 years. That's how to make money work quietly in the background. A practical shift? Before buying anything over $200, pause for 48 hours. Ask, does this produce income, appreciate in value, or improve a high-income skill? For example, spending $1,500 on a sales course, coding bootcamp, or even books like The Psychology of Money by Morgan Housel can increase earning power. That's financial education in action, turning consumption into investment and reinforcing disciplined money habits. When someone stops buying for applause, something wild happens, financial pressure drops. Personal finance becomes intentional instead of reactive, and confidence grows because decisions align with long-term goals. And once spending starts aligning with growth, there's a deeper layer to protect, something even more valuable than money itself, energy. Modern billionaires treat focus like it's cash in a briefcase. They understand that financial psychology isn't just about numbers, it's about attention. Every distraction is a withdrawal, every deep work session is a deposit into future income. Strong money habits begin when someone realizes their energy directly affects how to make money and grow in personal finance. Think about Tony Stark in Iron Man. The world is chaotic, loud, full of opinions, but when he's in the lab, he locks in. That's not luck, that's controlled focus. Someone trying to improve financial education can't binge negativity all day, scroll for 5 hours, and expect elite results. Limiting social media to 30 minutes, muting draining conversations, and replacing them with skill-building time changes everything. A practical move? Track energy like expenses. For 1 week, write down what activities increase income potential and what drains it. If someone spends 10 hours a week watching random content but 0 hours improving a high-income skill like copywriting, coding, digital marketing, or learning about ETFs and dividend stocks like Apple or Microsoft, the math speaks for itself. Protecting 2 focused hours daily can add thousands to annual income over time. Energy management sharpens money mindset in a way most people overlook. When someone controls inputs, clarity improves, stress drops, and decisions in personal finance become rational instead of emotional. And once focus is protected, the horizon expands beyond this month's bills. It stretches years ahead into something much bigger. Modern billionaires don't wake up asking, "How do I survive this month?" They ask, "Where do I want to be in 10 or 20 years?" That shift in financial psychology changes everything. Instead of reacting to bills, they design outcomes. It's one of those elite finance tips that rewires money habits and strengthens a long-term money mindset in personal finance. Think about the founder, the story of Ray Kroc building McDonald's. He wasn't thinking about selling burgers for quick cash. He was thinking about owning the land under every location. That's decade thinking. When someone invests $500 a month into an index fund averaging 9%, over 20 years that could grow to over $300,000. That's how to make money through patience, not hustle alone. A practical step? Reverse engineer the future. If someone wants $1 million invested in 20 years, they calculate the monthly investment required and build habits around that number. Automate contributions to a Roth IRA, 401k, or brokerage account. Study financial education through books like The Simple Path to Wealth by J.L. Collins, and track progress quarterly, not daily. That's how disciplined money habits compound quietly. When decisions stretch across decades, impulse fades and clarity rises. Personal finance becomes less about emotional wins and more about strategic positioning. And once someone starts thinking long-term, the next logical question hits: what skill can be built today that will multiply income tomorrow? Modern billionaires don't just work hard, they build skills that solve expensive problems. That's the core of financial psychology at a high level. Instead of asking, "How can I get paid more hours?" they ask, "What problem can I solve that scales?" That shift upgrades money habits and completely transforms a person's approach to personal finance and how to make money. Look at Mark Zuckerberg in the social network. Love him or not, he didn't build income by trading time for cash. He built a platform that scaled to millions. That's scalable value. Someone today could learn high-demand skills like coding SaaS products, performance marketing, AI automation, or high-ticket sales. Financial education isn't just about budgeting, it's about positioning yourself where the money flows. A practical move? Identify problems people already pay big money to fix. Businesses pay thousands for lead generation, copywriting, web design, or software solutions. If someone dedicates 12 focused months mastering one of those, charging $2,000 per client and landing just 5 clients per month, that's $10,000 monthly revenue. That's not hype, that's math powered by consistent money habits and a strong money mindset. When skills scale, income detaches from hours, and personal finance levels up fast. Stress drops because earning power increases. And once income expands, there's a critical test that separates amateurs from modern billionaires: how someone reacts when everything feels unstable. Modern billionaires understand one brutal truth about financial psychology: emotions destroy portfolios faster than bad math. When markets drop or income slows down, average investors panic sell, but disciplined money habits require composure. Staying calm is one of the most underrated finance tips in personal finance, because fear spreads fast and logic disappears even faster. A strong money mindset is built in chaos, not comfort. Think about The Big Short. While everyone else was blindly celebrating the housing bubble, a few investors calmly studied the numbers. They didn't react emotionally, they reacted strategically. When the S&P 500 drops 20%, history shows it has always recovered over time. Someone who panic sells locks and losses, but someone who keeps investing during downturns often multiplies long-term gains. That's how to make money when others freeze. A practical move? Create written investing rules before emotions hit. For example, if the market drops 15%, I continue automatic investments. Or I never sell quality index funds because of headlines. Automating contributions to diversified ETFs and keeping a 6-month emergency fund protects personal finance from emotional decisions. Financial education teaches that volatility is normal, but discipline is rare. When someone stays rational during uncertainty, confidence compounds just like money. They stop checking their portfolio 5 times a day and start focusing on income growth and skill development. And once emotional control becomes solid, there's one final layer that determines everything: the condition of the mind shaping every financial decision. Modern billionaires know something most people overlook: wealth is built twice, first in the mind, then in the bank account. Financial psychology begins internally, long before numbers grow. Proverbs 4 verse 23 says, "Above all else, guard your heart, for everything you do flows from it." That's not just spiritual advice, it's elite-level personal finance wisdom that shapes money habits and a powerful money mindset. Think about the Matrix. Once Neo realizes the world isn't exactly what it seems, his perception changes and so do his abilities. The same thing happens when someone upgrades their internal dialogue about money. If a person constantly says, "I'm just bad with money," their habits follow that script. But when financial education reshapes identity into "I'm learning how to make money and manage it well," behavior shifts fast. A practical move? Audit mental inputs daily. Replace toxic narratives with structured learning. 20 minutes of reading books like Think and Grow Rich by Napoleon Hill, listening to podcasts on personal finance, or studying case studies of investors who built wealth steadily. If someone feeds their mind 30 minutes of intentional growth daily, that's over 180 hours per year shaping better decisions. Those reinforced money habits directly impact income and investing consistency. When the mind is guarded, fear shrinks and clarity expands. Decisions align with long-term vision, spending aligns with values, and income strategies sharpen naturally. And now that every layer is exposed, from tracking numbers to protecting thoughts, it's time to connect all of it into a bigger picture that most people never see coming. Remember how overwhelming it felt to live paycheck to paycheck, guessing with your money, reacting emotionally, buying for applause, and stressing when the market dipped? Now you see the pattern. You've seen how financial psychology shapes outcomes, how disciplined money habits beat hype, and how a strong money mindset turns ordinary income into long-term wealth. Personal finance isn't about luck, it's about structure, awareness, and consistent execution of the right finance tips. Hit that subscribe button and turn on notifications so you don't miss strategies that can completely transform your relationship with money. If you're serious about learning how to make money, strengthen your financial education, and build real wealth step by step, you need to stay connected. Growth doesn't happen by accident, it happens by exposure and repetition. Now here's the next move. If you're ready to go deeper, to actually build passive income streams, eliminate debt strategically, increase your earning power, and maintain mental clarity under financial pressure, there's a practical roadmap waiting for you. The Material Holistic Health, Nourish Your Mind, Balance Your Finances, Transform Your Life breaks down exactly how to rewire your financial psychology, create structured money habits, design income systems, and align mental strength with wealth creation. It's not theory. It's actionable frameworks you can apply immediately. Click the link in the pinned comment now and start transforming your finances today. Don't let another year pass repeating the same patterns. The tools are there. The structure is clear. The only question is whether you'll act. Check out the material in the pinned comment and take control of your future.